All right, so today we're going to talk about activity-based costing, and that's chapter 3. We're going to go through some computations, and then we're going to review the quiz for chapter 1 and for chapter 2. So what is the goal behind activity-based costing? What are we trying to achieve? Well, it's related to what we've already talked about, which is the idea of how do we apply costs. That's one of our challenges, is that we know that we have costs. And basically, this is something we're going to be talking about all semester, is we know that we have costs, but we need to classify them. We need to classify the costs, and also we said that we need to focus on cost behavior, which is also important because all of that information we're going to need to make decisions. As managers, we're going to need that information to make decisions. So activity-based costing says, you know, we have these costs and we don't really know how to allocate them. How do we allocate the costs that we have? Now, there's a variety of different ways that you could allocate costs. That's our challenge. So we have to make a decision about how we're going to allocate the costs that we have. So one way that we could do that is known as activity-based costing. That's what we're going to talk about today. And we're going to look at some examples as well to see what level the activity is at, whether it's the unit level or the product level or the batch level. Yeah, you could give that to Mackenzie. That's Mackenzie right there. All right, thank you. So in terms of activities, there's different levels of activities. It's a type of hierarchy, if you will. There's the unit level, batch level, product level, all right, so take a couple of notes on this. So when we look at the unit level, what are some of the activities? Well, for example, it's processing the units on the machine. And so you say, okay, well, so what do we do with that? If that's what we're going to use to allocate costs. Well, we need to have a measure. What is the activity measure? So in this case, what would we think is going to be the activity measure? Machine hours. We're going to look at an example there. What about if the facility is not very automated? What if it's very labor intensive? So maybe you have people there that are doing cut and sew, and maybe they're not even in China, for example. I've been in factories where they have literally in a facility 500 sewing machines, and they have people at each sewing machine stitching together handbags, all sorts of different items. Right? Not necessarily in the same facility at the same time, but that's what they do. But let's say, for example, but in that case, right, I mentioned as a point of comparison, in that case, we're going to say, well, how many hours, right, to your point, how many hours were they on the sewing machine? But let's say they didn't have sewing machines. Let's say that they were either stitching by hand, or they were assembling a product that had component parts. Like what would you think would be an example of a product that has component parts that you use? Think of a product that you have. What? Yes, but yeah, we think in that case, although of course labor is involved, it's a very automated process, and you would think, well, it has something to do with the number of hours that the assembly line is being operated. But yeah, maybe like a toy that has, a variety of different parts that you need to snap together. So you have people in the facility that are going to have to put the toy together. So in that case, we're going to look at the direct labor hours instead of the machine hours. So that's at the unit level. Now think about in a facility that's using a certain supplies. We could also look at the number of units produced. So already there at the unit level, we have 3 different measures. So we said there's 3 activity measures at the unit level that we could use. We could use the number of machine hours. We could use the number of labor hours. We could use the number of units produced. So you might have 10,000 units of product A and 50,000 units of product B and 40,000 units of product C. So out of that, that's 100,000 units that we produced. Then 10% of the units are product A, 50% are product B, 40% are product C. So that's, for example, how we would use the number of units produced as a way to allocate costs. You see that? So in other words, they say, well, we have these costs. How do we allocate? Well, since you produce 50% of the units, then that product line is going to absorb 50% of the cost. And since product A only produced 10% of the units, they're going to absorb 10% of the cost. Because remember, they're in the same facility. They're in the same manufacturing facility. And they have the same plant manager. Mary's their plant manager. And Mary has these multiple product lines. But how do we allocate Mary's salary? Because remember, as the plant manager, we said it's an indirect labor cost. It's manufacturing overhead. But at some point, we have manufacturing overhead that's going to be very significant. We don't just capture those costs there and then forget about them. Well, then once we have all those costs, then we have to allocate them. So we could say, well, since product A only has 10% of the units produced in the factory, we only produce, out of the total number of units, 10% of them with product A, then product A is going to absorb 10% of Mary's salary. Does that seem reasonable? There's got to be some way for us to allocate it. We also said about machine hours. Well, if this machine is running, let's say, 40,000 hours, and another machine is running 20,000 hours, well, the 40,000 hour machine is going to absorb twice as much of the manufacturing overhead. And if it wasn't machine hours, then it could be labor hours that we're going to use to allocate the cost. So that's at the unit level. But let's talk now about the batch level. Think about the number of purchase orders that we get for a particular product. So think about the number of purchase orders that we get and that that we process in the organization. Well, what's a purchase order? Somebody's saying something. What is it? Yes? Right, the order that we receive from the customer. We receive a purchase order, or we can issue a purchase order to get supplies. So we could use the number of purchase orders that we process as a way to allocate costs. Now, in even a small, if you're thinking about it, a manufacturing organization, even a small manufacturing organization, you could literally have thousands of purchase orders. So you might think, oh, well, how is that going to be effective? Maybe we have 2 purchase orders, 5, 10. We need a purchase order for everything. Why? Because they have accountants that work there. So money is not being spent unless there's a purchase order that documents what's being purchased, how many units we're going to receive, and how much we're going to pay. And you're going to learn in auditing that that's an important part of the control process. That the purchase order needs to indicate what it is that we're buying, at what price, and at what quantity. And that's got to match up to the check that's issued. Because at some point you want to make sure that you actually receive those items. So what happens? You place an order to a company in Turkey to buy the plastic. And we buy it from Melissa. So what happens? What do we do? So we issue a check to Melissa, but she never sends us the plastic. But that's okay because she's part of our team, right? She's part of our class. Well, we might be okay with that, but the organization is not going to be okay with that. The shareholders are not going to be okay with that. The auditors are not going to be okay with that. So it's important to make sure that you have a purchase order. And we could count the number of purchase orders. The number of setups. Remember we talked about making those baking dishes? We talked about making the baking dishes and how long it takes to, how much downtime we would have in the organization if we take and we want to make different baking dishes. Some of them are 9 by 13. Some of them are 8 by 8. They come in different sizes, different colors. And every time you want to make it in a different size, you have to change the molds on the equipment. Now, each mold has 12 bolts that are holding it to this table. So there's a table that rotates, and you have the molds on there. And what happens is the glass comes down, the molded glass comes down, falls into the mold, the plunger presses the glass into the mold, and then it rotates. And then the next piece of glass comes down, goes into there, plunger presses it. Now each mold is bolted on there. There's a certain amount of downtime that's going to be associated every time you say, well, now we're going to make, instead of the rectangular dishes, we're going to make the square dishes. That takes many hours to take off the rectangular molds with all those bolts. Because remember, it's got to, when the mold is on there, it's got to be very sturdy. Because there's a hydraulic plunger that's going to come down and press the glass into the form of the dish. So each of them has 12 screws and bolts. You have to loosen all of those and then bolt on the 3/4 dishes. So we could look at the number of setups, and importantly, when we think about the number of items that we're going to produce, because one of the things we're going to talk about during this semester is what items we should produce, what items we should discontinue, and importantly, before we decide, we're going to need to have the information as to what impact it's going to have on the profitability of the organization. Because remember, we said that the fixed costs are not going to go away. What we're interested in is what variable costs are we going to be able to avoid. Or even if we don't discontinue the line, maybe we stop making it in our facility, but maybe we, instead of making it, we buy it from someplace else. And one of the things we need to understand is, well, now we don't need to have laborers, for example, that are going to spend literally an entire day, 8 hours or more, with these setups. Because that means there's going to be downtime in the organization. So the cost, the fixed cost associated with the manufacturing facility is still going to exist, but the direct labor associated with that particular line is something that we're going to be able to avoid. And sometimes it makes sense to do that, and sometimes it doesn't. There's definitely a fascination with sourcing products because everybody thinks that it's cheaper. Well, we know, we talked already just in the last couple of weeks about the different types of costs, and it's not just direct labor. When we talk about sourcing, people spend a lot of time on direct labor, which means what? What is it that they're so enamored with when they think about sourcing a product from Turkey or from China or from Vietnam? The direct labor, which is the hourly rate. So it's much more expensive to have people on the assembly line in Detroit to tighten bolts than it is in China or other newly industrialized countries around the world. But that's not the only cost. Direct labor certainly is something you want to consider. Absolutely. But there's certainly also other expenses and other trade-offs. Like, for example, the fact that you have to ship the product from China. How much do you think that costs? Can you imagine?
It's much more expensive than produce.
In some cases, it could be. In some cases, it makes sense to source products, to buy the product from a company, let's say, outside of the U.S. But what I want to have us take away is that that's not always the case. That we shouldn't just say, of course, we're going to source it. We're not going to make it ourselves. It might be. In some cases, it might be. But there's also expenses associated with sourcing. Like, for example, you have to ship it, so you have to ship it on a boat in a 40-foot container. Generally, the containers, the most popular are 40-foot containers. And one container, depending on the availability, you have to pay between $2,500 and sometimes as much as $5,000 for one container, or one 40-foot container. And that's just for one container. Now, if you're a reasonable sized manufacturing organization, how many of these teddy bears do you think that you could get into a 40-foot container? Remember last time we were talking about quantities that we produce millions of these. I mean, how many of them? You can put them in boxes, and then you're going to stack up all these boxes into the container. I mean, how many do you think could fit in there? So you might say, oh, 5,000, that's not a lot. But how many of them are you shipping? Not a lot. Not a lot. So if you're actually wanting to ship or to source 1 million teddy bears, then all of a sudden now you're talking about your shipping and transportation costs could easily be, several $100,000. All right, so something to keep in mind. We're going to go through some scenarios, and we're going to have to make some decisions as to what's going to make sense for us to do. All right, let's talk about at the product level. We're going to be involved in designing products. Now, sometimes to design a product from scratch takes many months. And you work as part of a cross-functional team, and you get inputs from the people in marketing, you get inputs from people in the sales organization, you get inputs from people in the manufacturing organization. One of the things that we could look at the product level has to do with the time that's spent designing the particular product, or the time that you spend testing a particular product, which is many hours. So we're looking at the total amount of time that's spent on testing, the total amount of time that's spent on design, which you might have a design team of 10 people, and they're all working 50 hours a week. So the hours add up pretty quickly. It's not like we think, 3 hours here, 2 hours there. So that's something that we need to consider as a way to allocate force. All right, so let's look at exercise 10 in chapter 3. All right, this is on page 155. All right, the name of the company is Greenberg Company, and it's a manufacturer of consumer goods. And what we have here is a variety of activities, and what we need to do is classify those activities. Right? We need to indicate whether that activity is at the unit level, at the batch level, at the product level, or at the facility level. All right, so the first one says, for this company, the Greenberry Company, it says, direct labor workers assemble a product. So what we want to do is decide, for this activity, what is the level, and then what is the activity measure that we're going to use. So what do you think? Direct labor workers assemble a product. Okay, one person. Somebody raise their hand. Who's it going to be? Elena? Say it again.
Unit level, direct labor.
Right. So everybody got that? So it's at the unit level, just like what we were just discussing. It's at the unit level, and it tells us that we have workers that are assembling it. Remember, like that toy. And we said we're going to assemble this toy that has many different component parts. And so how are we going to measure? Well, in this case, the most practical would be the direct labor hours. The next question says, engineers design a new product. Okay, right, so the level is at the product level. Right, so it's going to be design time, design hours. So that's question B. Question C tells us at Greenberry that a machine is set up to process a batch. So what is that going to be? Okay, but Lena, go ahead, tell us the level.
Batch level.
Right.
And number of cycles.
Right. It could be it could be the setup time, or it could be the number of batches. So either or, but that's absolutely right. It could be the setup time. Everybody got that? Okay, the next one. D. Numerically controlled machines cut and shape materials. Everybody knows what that is? Numerically controlled machines? What? Go ahead. It has to do with automated equipment. It could be on the assembly line. And what it is that you program into the computer the machine tasks. So in other words, like in this case, the machine is actually going to cut the material. Why? How do you know that they're going to cut it the same way every time? How do you know it's going to be precise? Because we program into the equipment the exact dimensions for each piece of leather. And so it should be accurate. Now, every time I had to do that, there would be some variation. Because I would probably want to cut it precisely the same every time. And then once we set Dallas loose on the equipment, who knows? Anything could happen, right? So, numerically controlled machines is a very efficient way to operate and with a high degree of accuracy. So here they're telling us that they have numerically controlled machines that cut and shape the materials. So what level is that? Yes, Caroline is right. It's at the unit level. And then, so what measure are we going to use? What is the activity measure? Right. Is this the machine hours? Or what's another alternative besides the machine hours? Right, the number of units. So how many pieces of leather? E. The personnel department trains new employees concerning company policies. Right, that's at the facility level. And what is our activity measure? Right, the number of hours training. Or what else? What do you think? So remember, we're talking about, what did you say? We're training new employees. Well, so we have the training hours, we have the number of training hours, but then, right, the number of new employees. So how many people did you train? So certainly we could look at how many hours it took us to train them, but also how many of them did we train? F. Raw materials are moved from the receiving dock to the production line. Well, it's got to be. I think you mentioned all of them. So it could be at the unit level or at batch level. Yes, it could be. It could be most likely batch level, but possibly the unit level. And then what is going to be the measure? Now, there's a different number of different measures that you could use. So what do you think? What are some of them? The what? And you got to tell us a little bit more. What do you think? What did we just say that we're doing? We're moving the raw materials from the receiving dock to the production line. Right, so the number of units that we're moving, or the number of moves. either the quantity of the material that we're moving, or how many times we have to move it, how many times we're going to have to go back and forth. G says a random sample of 10 units in each batch is inspected for defects. So what level is that? Batch. And then what is going to be the activity measure? Right, the number of units, or another way that we could look at it. That's definitely right, but what else? What else? What's another way that we can measure it? Right, absolutely. How much time? It could be. You could argue that, but in this case, they specifically say that each batch. In some cases, it could be product, but that's something as the manager, since you're the manager, that you would have to decide. But in this case, it seems like your assistant manager already decided that it was batch. Now, what do you think about that? This random sample of 10 units. Do you think that's an effective way to achieve a high level of quality? What do you think? So tell us, Madeleine, what do you think is the issue there? Well, yeah, we need to know.
Finish product to the end. That's the full piece of time. Someone stand over the end.
Yeah, we should definitely be able to measure quality while the process is running. So in other words, you don't want to produce 100,000 units and we have this whole room filled up with these teddy bears from Turkey and then find out that what? That they've got problems. They weren't stitched properly. They only have one eye. That's going to freak kids out. I mean, we got to be tolerant and sympathetic, that there's people that, unfortunately, for whatever reason, they might have one eye, but that's going to be traumatizing to a little kid. They don't have any nose. They start to ask questions about these things. How come my bear doesn't have a nose? You try explaining that to a little kid. So we want to measure quality while the process is still running. So when we identify a problem, we could take corrective action. So there's got to be control over the process. Now, any process is going to have an upper limit and a lower limit. And depending on what you're producing, the equipment should be able to tell you when there's a variation. So when the process has gone out of the control limit. Now, because even though we're using sewing machines to make these teddy bears, it's very labor intensive. So of course we're using the machine, but you're using a lot of labor. So you can expect some variation. And you're going to have to check. You're going to have people on site that are going to be checking literally each teddy bear. Especially if you're sourcing, you definitely need to make sure that you have people there that are checking. Because what's going to happen is if you don't, is they're going to just tell you to check after everything's produced. They say, well, just take from those top 5 boxes up there. What does that mean? All those in the top 5 boxes don't have any problems. Because when you get samples, when you go into a factory, you ask them to produce our Brooklyn College teddy bear, they're going to send a sample that's perfect. It's going to have all the noses, eyes, right? Ears, everything. And it's going to be double stitched and everything's going to look great. But then that's for the 10 that they sent us. But then when you tell them, all right, now send me 10,000, then that's when you run into problems. That's why you need to have people there that are going to ensure that you're achieving the highest level of quality. Now, some manufacturing equipment can tell you that's going to be able to measure the tolerance. Let's say, for example, if it's for the plastic. Remember you purchased all that plastic? And you're making plastic cups. It could tell us when the thickness of the cup varies. Now, of course, you're going to expect that there's going to be some variation in the thickness of the cup, but then sometimes it might be too thin. And the person that's operating the machinery should be able to stop the equipment and make the proper adjustments. Now, that wasn't always the case. What they did previously was, the mindset they had was, because they were so concerned about the downtime, because they understand that's a significant cost, what they would do is just let the equipment run, and then at the end, check for defects. But by then it's too late. What happens if you find out? Oh gee, the cups are not thick enough. Then what? Then you're gonna have to discard them. Or in some cases you might have to rework them. So it's better to find out early on. So for homework, what you're going to do is 11. Problem 311. Which is basically more activities, and what you have to do is determine the level and the activity measures. Alright, so let's keep moving. Now let's look at exercise 6, and then for homework you're going to do exercise 7. Yeah. 11 and 7. Alright, so exercise 6 talks about the cost flows in activity-based costing. It says, Silva and Company uses activity-based costing to determine product costs for external financial reports. The company's partially completed manufacturing overhead T account for the current year is shown below, which in this case shows $1,302,000. So the first question is, what does that represent? Yes, okay. And did you say something before that? Just say it again. Let me just hear what you said. What was it? No, this is the actual. Yes, this is actual. What they're showing us here is the actual manufacturing overhead in course incurred during the year. So when you see the debit to manufacturing overhead, that represents the actual overhead costs incurred, and the credits are going to represent the overhead applied. What was that? I can't hear you. Right. For the credit, yes, it's the credit. It's the predetermined overhead rate that we determine. So that's what we've applied. All right, number 2 says, at the beginning of the year, the company made the following estimates of the cost and activity for its 5 activity cost pools. So here, this is what we've been talking about. The first cost pool, the first activity cost pool is labor related, and it says that the activity measure is the direct labor hours. So that makes sense, right? It tells us that the estimated overhead cost is $280,000, and it tells us that the expected activity level is 40,000 direct labor hours. Now I'm going to show you what we're going to do with this information, but let's make sure we're all on the same page in terms of the information that we're giving and how it's applied. Then it tells us that the next activity cost pool is purchase orders. Remember we talked about purchase orders? And it says here that they're looking at the number of orders. They estimate the overhead cost at $90,000, and they expect 1,500 orders. And in some cases, it could be more than that. Parts management is the next activity cost pool. The activity measure is the number of part types. So here, it suggests that this company, that they have 400 part types, which is reasonable. It could be a lot more than that. It could be 4,000 part types. It depends on how complex the product is that you're making and how many components it has. All right, at this company, they have board etching. And we have the activity measure as what? The number of boards. And the expected activity is 2,000 boards. The estimated overhead cost is $360,000. Then they've also identified general factory as another cost pool. The activity measure is machine hours. The estimated overhead cost is $400,000, and the expected activity is 80,000 machine hours. So this is a great example. You see that each activity cost pool is different. So we have 5 different cost pools here. The measure, the activity measure, is different for each one. So again, I think this is a good illustration because it gives us an illustration of where we use direct labor hours, the number of orders, the number of part types, the number of boards, the number of machine hours. And then what we have to do here is it says, now that they've shared with us this information, it says compute the activity rate, which is, what, I think Tatiana? Is that your name? That's what I meant to say. It says the predetermined overhead rate, right? The compute the activity rate or the predetermined overhead rate for each of the activity cost pools. Right? So what we're going to do, the way that we're going to do this is we're going to have to divide the estimated cost by the level of expected activity. All right, so you guys are going to help me with this. All right, so what's the first cost pool? So we have these different activity cost pools. All right, labor related. All right, what is the estimated overhead cost? $280,000. And the expected activity? So it's 40,000 direct labor hours. And so the activity rate is $7 per hour, right? $7 per direct labor hour. When we talked about that last class, we calculated the predetermined overhead rate. So, well, what are we going to do with this? Well, the reason why this is helpful for us is because we're going to have to do a lot of what-ifs. Remember, we're managers in this organization. We're going to need to decide what if we operated if we employed workers for 50,000 hours. What if the workers worked 60,000 hours? What if they worked 70,000 hours? Well, then we've got some challenges there in terms of how we're going to internalize that information. Don't we? Because that in of itself doesn't solve the problem. That just defines the problem. So we've decided now that we're going to have our laborers work 50,000 hours. The only way that we could really get our hands around that is if we have calculated the activity rate so that we'll know that the estimated overhead will be what? At 50,000 direct labor hours. What is the estimated overhead going to be if our direct labor, if our workers are going to work 50,000 hours? $350,000. So now we know. Because otherwise we're going to be sitting there saying, well, why not? Maybe we should hire more workers. Or maybe instead of, if we're operating the facility 2 shifts, maybe in the facility we should operate 3 shifts. So in other words, one shift is from midnight to 8 a.m., and the next shift is from 8 a.m. to 4 p.m., and then we're done. But you say, well, if we do that, we're not going to be able to make enough teddy bears to ship to Walmart. So then Mary says, that's okay. I called Coach. He told me what to do. He said, we're going to operate a 3rd shift. We're going to operate from 4 to midnight. And that means that if we do that for the next 3 months, that means we're going to have direct labor hours of 50,000. If we do that for the next 6 months, we're going to have direct labor hours of 60,000. If we do that for the next 9 months, we're going to have direct labor hours of 70,000. And if we do that for the next year, for the next 12 months, we're going to have direct labor hours of 80,000. But then, we still don't know how much our overhead is going to be. So that's why calculating activity rate is so helpful, because we know at 80,000 hours, so if Mary takes my suggestion and she operates a 3rd shift, then at 80,000 hours, what is going to be our estimated overhead? $350? No. Right, at 80,000 hours. 560,000. At 80,000 direct labor hours, the estimated overhead is going to be $560,000. And if it was 60,000 direct labor hours, Mary says, you know what? Maybe it's a little too ambitious. Coach is a little overzealous. We should just, for the last quarter of the year, we'll just do 2 shifts instead of 3. So what is it going to be? $420,000. And then with that information, then what Mary has to do is say, okay, well, at $40,000, the estimated overhead is going to be $280,000. At 50,000 hours, it's going to be $350,000. At 60,000 hours, it's going to be $420,000. Then now we have data, now we have information that we could use to make decisions. Now we know, should we operate that third shift, or are we going to buy teddy bears, even if it's not all of them? Because we could have a type of mixed manufacturing where we make some of the product and where we buy some of the product. So, but Barry's going to know, because we're going to have this estimate of what overhead is going to be. And if in Turkey the overhead cost is going to be less than where we have the information to make the decision, right? So do you see the application? I think we're getting a little closer now. All right, so let's look at the next one. So that's just labor. Now we're going to look at purchase orders. So what do they tell us the estimated overhead is for purchase orders? $90,000. Not lira, dollars, okay? That's lira is in Turkey. We're not up to that yet. We're going to talk about that later. But for now, this is $90,000. And the expected activity? 1,500 orders. And so $60 per order. Parts management. Estimated overhead? $120,000. And the expected activity? And that's going to give us an activity rate of $200. Sometimes it makes a lot of sense, and you can see why if you just take in this scenario to maybe share parts. If you make 3 different products, maybe you could share parts amongst the products. And that's part of the reason, if you look at like Ford, for example, why they acquired other companies and combined the manufacturing operations. One of the reasons that made a lot of sense is because this way they can operate more efficiently, because a lot of times their facilities were underutilized. So even though it turns out that the Ford Taurus is a popular model for Ford, their sales have declined significantly. And when I say significantly, I mean like their sales have declined by billions of dollars over the last 20 years or so. They combined and acquired other companies, combined the operations, the manufacturing operations, so that instead of the plant operating only 50% of the time, that the facility can operate 90% of the time. Because remember, what's the challenge with operating only 50% of the time? Yeah, so you're still paying Mary's salary. Mary's that's indirect labor. We're still paying her salary. She's still there. We're still paying the president of the company. whether the manufacturing facility is operating 24/7 or it's only operating 2 shifts, we're still paying the rent or the interest on the loan. We're still paying the real estate tax. We still have all those fixed costs. Whether we make, 1 million units or whether we make 1 unit. So whether we make 1 million cars or we make 1,000 cars, those fixed costs are still the same. So that's why in manufacturing, our challenge is to make as many units as possible to maximize the facility, to maximize the level of production, so that, with a fixed cost, what do we say? That the total fixed cost is going to be constant. Right? Total fixed cost is constant, but the unit fixed cost is going to decrease with the level of production. So the more units that we produce, the smaller the amount each unit is going to have to absorb of fixed cost. The variable cost, the more units we make, the greater the variable cost, the total variable cost. Usually the variable cost per unit is going to stay the same. What would be an example of the variable cost per unit? Yes, go ahead. Plastic. Tell me about the plastic.
It's a variable cost that is depends on our units. It's the same amount as each unit.
Exactly. So we use 2 ounces of plastic, and if we make 1 unit, we use 2 ounces. If we make 100 units, we use 200 ounces. And the more units we make, the more plastic we use, the greater our variable cost. So what Ford did is, once they consolidated their operations, which was very helpful to them, then what they did is they understood this. This is the reason why I'm mentioning this. They understood this cost associated with the parts. So what did they do is they started to share parts. So instead of, there's a lot of complexity. Could you imagine in a Ford facility, you'd have thousands, literally thousands of different parts. So they say, you know what? Why for every model we use a different bolt to put the tires on? Why? And they have so many different models, right? They have a very significant brand portfolio of different cars that they market. So they said, you know what? It doesn't matter if it's the Ford Taurus or some other line. We're going to use the same bolts to put the tires onto the car. So that reduces complexity in the organization. In some cases, they even use the same chassis. The chassis, you guys know, is like the frame for the car. Now, some people are not too crazy about that. Why? Why does that that's like some people, it raises their eyebrows when they hear that they're using the same frame.
It's like there's no individuality, you know? It's like they're using their same higher costing cars being modeled on a cheaper cars than they.
Exactly. So what Gregory is saying is that you take the frame for the Ford and you use that same frame on a Jaguar, because Ford had acquired Jaguar. Well, the Ford Taurus is a nice car. It usually costs about, usually the base price is somewhere around $20,000. But a Jaguar is $50,000 and up. And that's just an S-Type. And they have Jaguars at over $100,000. But now if you were buying, if you bought the S-Type, which is actually, it's a very nice car, the S-Type Jaguar, especially the Carnival red one, you would feel if somebody told you that, and you were sitting in class, and somebody said, you know that, Greg, you know that that's the same chassis as the Ford Taurus, you would start to have what they call that in marketing, buyer's remorse. A little bit of post-cognitive dissonance. You start to think, well, maybe, did I really do the right thing? Or maybe I paid too much. So companies do that. They understand that there are costs, that the more parts they have, the greater the cost. So they try to minimize complexity. Then in this organization, as part of their process, right, because this is the product that they make, not every company is going to have board etching, but at this company, they have that. What is their estimated overhead? $360,000. And the expected activity? 2,000 boards, not hours, 2,000 boards. And then what is going to be the activity rate? $180 per board. Now, so based on what we discussed, somebody now explain to me the context of this board etching and what did we find out here? What is that? How does that help us? So what's the what if that we're going to go through? How are we going to use this information to make a decision about our production?
How price your
Yeah, ultimately, that's what we're trying to find out. Most definitely. We're trying to find out what does it cost, what does the product cost. Absolutely. And what we're going to talk about on an ongoing basis this semester is how do we determine what the product costs are? Because we've already found that it's not as simple as you might think. How much does it cost to make a product? That's something that we need to determine. But what about if we say that the number of boards is 3,000, or 4,000, or 5,000, or 6,000? That's the key. That's why we go through and calculate the activity rate, because it's going to allow us to make some assumptions about what we're going to do going forward. Remember, this is not financial accounting. Financial accounting is about analyzing past performance. We're, as managerial accountants, what we're trying to do is make decisions about the future. So we need to know how much is it per board, and what's the implications if it was 3,000 boards or 4,000 boards. So what's next? General factory? And what is the estimated overhead cost? $400,000. And they tell us that the activity level is 80,000 machine hours, which is going to give us
$5.
So what we just calculated is, for these cost pools, the activity rates. Each one of these, we could go through scenarios and say, what if this changed? Because that's going to impact the profitability of the line. Questions about that? So you're going to do that for homework, but let's go follow 3-7. Well, let's see, what's the next thing you have to do? Yes, we can do it right now. All right, so the next part says, during the year, this is for part 3, It says during the year, actual activity was recorded as follows. So we have a predetermined overhead rate, which we calculated. That's what we have on the board. And now what we're going to do is we're going to take into account the fact that this is actually the level of activity, the number of direct labor hours, the number of orders, the number of boards, the number of machine hours. So what we need to decide now is the amount of manufacturing overhead costs applied to production for the year. That's what we're going to have to decide. Follow me? Alright, so we're partially there. Now we just need to take the information that we already have, which is the activity rate, and reflect the actual level of activity to determine the level of applied overhead. So this is, now we're going to find out that it wasn't 40,000 direct labor hours, but it was actually 41,000 direct labor hours. So let's see how we do that. Yes. Okay, so tell us. Elena, right?
Yeah.
All right.
So we multiply the $7. We should test the labor hour by 41,000 hours, the direct labor hours, and we get $287,000.
Yes. You go up there, Caroline? You can do it. Yes, you can. Yes, you can. So tell us again, I'll let it get $7 per hour.
$7 per hour times 41,000 hours, and we get $287,000.
All right. What about purchase orders? How many purchase orders? Well, our expected activity was 1,500, but we find out that it's really 1,300. All right.
No, we're not.
Okay, all right. Let's check it. 78,000. All right. What about the part types? 420 parts. And that's 126,000. And what about the number of boards? We thought our expectation was 2,000, but then we found out actually was 2,150 boards. $387,000. And then on the general factory rate, we expected 80,000 machine hours, and in this case, the actual activity was 82,000 machine hours. Which is how much?
410,000.
Good, 400 per thousand. And that gives us a total of, right, 1,288,000. Questions? So it made sense to what we did. So you see why we went through and calculated the activity rate. Then we found out that the actual activity was not what we expected. In fact, in this case, the actual activity was, well, almost for all of them, except for the number of orders, the actual activity was higher. Fun times. Now let's see what's next. Now it tells us, determine the amount of under-applied or over-applied overhead costs for the year. All right, so let's see how we get that. So how much is this?
1,250,000.
I heard somebody said 1,000,000. No, not 1,250,000.
1,302,000.
Right.
Excuse me, person. Where's the number from? Where's the number from?
This is the sum, the total. This is what the estimated overhead was, and we added all of these activity costs to get.
Yeah, this is
I'm only equal that.
that's 1,250. It's not 2.
You guys. Good, good, good. Okay, so let's go back. Let's see, where do we have some board that we can work with? Let's go over here. All right, so the actual
was the actual
right,
that they have for number one.
right. Siobhan, right?
Yes.
All right, tell us, Siobhan. So the actual overhead, let's see if we're going to get this here.
That was
Actual.
the 1,000,002.
All right, so Siobhan says the actual overhead incurred is the $1,302,000. The overhead applied is, yeah, tell us, Siobhan.
The 1,280,000.
Right. And that gives us $14,000. So that's the overhead that was, is it?
Under.
Who said under? Who? Who's taking credit for this?
I said under.
All right, let's vote. Let's vote. Normally you don't vote in accounting,
Over.
right? Okay, so how many say over applied? Elena, just you? Elena Klemenko? Just you? Nobody else? And you? And who else? Come on, you have a 50-50 chance. What? And how many say underapplied? Interesting. So it's underapplied. So who could explain why? It is underapplied. Who could explain this to us? Why is it that the overhead is actually underapplied? So who can tell us? Elena, you can tell us.
Because the predicted amount was more than what happened to me. The other than predicted.
That's why you thought it was overapplied. So now we know. So that makes sense. So, but do you see why now? All right. So the actual overhead, Siobhan told us the actual overhead was $1,302,000. But despite our analysis, and this happens, we made some assumptions. We made some assumptions about the level of activity. And we applied, the overhead that we applied was $1,288,000. Remember, we couldn't wait to know what the actual was, because how could we, remember we said we're doing everything we're doing ahead we're not analyzing past performance, we have to make decisions. So we're looking at what we expect to help us make our decisions, what we expect overhead is going to be, and then we're going to apply it. So we made some assumptions, and we weren't that far off. I mean, anything could happen, but remember last class we said sometimes you're going to have a favorable variance, and we're happy about that, but then if the variance is too favorable, then you start to say, well, wait a minute, why are we off so much? Siobhan?
With the estimated overhead, that's just an estimate. We don't do anything else with that, right? After we actually calculate the overhead applied, we don't do anything else with the estimated overhead, right?
No,
it's
that's
basically just on paper what we think is going to happen. Or
right. Well, it's important because we're going to have to make journal entries, right? This is just not like just on paper. We're going to actually apply the 1,288,000 to our books. Then once we find out that whether it's over-applied or under-applied, then we're going to have to do some adjusting entries.
yeah, but we don't journalize the estimated amounts. We only journalize what we calculated off of the estimated amounts, right?
Which is
Like the 280,000 for the estimated overhead of
right.
Right? We don't journalize that. We just use that number to calculate the activity rate for the actual amount of labor hours.
Exactly. So this is the right. Of course, to get the applied overhead, the amount of the applied overhead. Right. This is what we know based on this direct level of labor hours. But then we're making some assumptions as to how much we're going to apply based on a certain level of activity. Whether it's hours, or whether it's machine hours, or labor hours, or the number of boards. And we're going to come up with a number. In this case, we were pretty close. I mean, it's actually, that's a pretty good job on their part. But then we found out that the actual overhead was 1,302,000. So we're actually underapplied by $14,000. All right. So far, good job. Give yourself a round of applause. You guys are awesome. All right. Team. Woo. Yes. All right. Then we'll see how you do on the homework next time. All right, let's talk. You guys got this down? All right, so you need a couple of minutes to take this? Well, you guys got it, because we're going to go on to quiz 1. So I need to write some things on the board for us. So we're going to talk about course concepts. So the first question about course concepts, it asks us about the wages of janitorial personnel. So they have some janitors that work in the factory, and we need to classify whether or not that's indirect labor and manufacturing overhead. So we have some choices here, and we could say that it is indirect labor or it's not indirect labor. We could say it is manufacturing overhead or it's not manufacturing overhead. So let's start with indirect labor. Janitors that work in the manufacturing facility. Is that indirect labor or direct labor?
Indirect.
Indirect labor. Why isn't it direct labor? Go ahead, Krista.
Technically, it doesn't directly relate to the end product, but I mean, it's not to say their services are useless, but it doesn't affect the hospital.
So we need to capture those costs. They're indirect costs. We need to capture them. but we can't trace them easily to a particular product. So we know that it's part of our product cost. It's a cost of making the product. We have to have janitors that are going to clean the manufacturing facility, but we can't trace it back to product A, or product B, or product C. That's why that's the distinction between indirect and direct cost. Direct cost we could trace back to particular products. We know how much plastic we're using to make product A versus product B versus product C. But because the janitors, it's a shared cost related to the operation of the entire facility, we consider that to be an indirect cost. And then, is it manufacturing overhead or not?
Yes.
It is. So what are the key components of manufacturing overhead?
Indirect labor.
Right, indirect labor and indirect materials. Our manufacturing cost consists of direct labor, direct materials, and manufacturing overhead.
Yes.
Yes. All right, so the next question is, which of the following costs would not be considered an indirect cost of serving a particular customer at a pizzeria? So these are the choices. It says, now remember, we're talking about which is not an indirect cost. The salary of the restaurant manager, the cost of the tables and chairs used to furnish the restaurant, the cost of the dough used to make the pizza that is ordered, the cost of the lighting and the heating in the restaurant. So it says, which of the following costs would not be considered an indirect cost? The cost of the dough. So all the others that we mentioned are indirect costs. The salary of the restaurant manager, that's an indirect cost. Because whether we're making small pizza, medium, large, or for a particular customer that orders a large pizza with pepperoni, another customer orders a medium pizza with sausage and peppers.
Professor, can you give us copy to read? This is the questions. Because I never could copy this thing.
Right. And that's why I'm reading the questions for you. But I'll give you a copy. So the cost of the dough is the only one that's considered to be direct material. Right? All the others are indirect costs, but the dough is a direct cost. That's what we could trace back to the pizza that Melissa orders. We know.
Yeah,
All right, the next question says, the salary of the chief executive officer would be considered, and then we have some choices. Is it a manufacturing cost? Is it a product cost? Is it an administrative cost? Is it a manufacturing overhead cost? So now, the salary of the CEO, is that? It's administrative, right? As far as selling, general, and administrative. It's not a product cost. It's not a manufacturing cost. It's a non-manufacturing cost. A non-manufacturing cost, we describe as selling, general, and administrative, and also we refer to it as a period cost. So some of the terms, they're used together. There's a variety of terms that we could use to describe certain costs. But we said the most significant are manufacturing costs and non-manufacturing costs. Manufacturing costs are considered to be product costs. Non-manufacturing costs are considered to be period costs. And we go through calculating the product cost because ultimately what we're trying to do once we get the cost of goods manufactured is determine what? The cost of goods sold. That's what we're ultimately trying to figure out, and you're going to see that that's a line on the income statement. Another important line on the income statement is selling, general, and administrative. But we're making a distinction because we're talking about how do we classify the costs. So I don't want you to think that we're just, oh, the salary of the CEO is not important, we're going to forget about it. It's just that we're not going to include that as part of the product cost. If the cost of goods manufactured, remember we talked about this in class, if the cost of goods manufactured is greater than the cost of goods sold, then, and the answer is, finished goods inventory has increased during the period. That's the answer. We had talked about that in class.
Could you repeat the question? Sorry.
So the question is, if the cost of goods manufactured is greater than the cost of goods sold, so that means what we produced, right, is greater than what we sold. And we said that happens. That's not like a bad thing. We just need to understand that in some cases, we're building inventory. We're going to have some finished good inventory left at the end of the period that's going to be in the warehouse. And it's very common to have finished good inventory estimated to be 2 months, sometimes 3 months. Sometimes you need to hold inventory because you can't make the entire production quantity to meet demand in a short period of time. So when we're building inventory in expectations of the fact that we're going to get that order from Walmart, for example. Question?
So what's the answer?
Yeah, what's the last part?
Cost of goods manufactured is larger than the cost of goods sold.
Then that means that the finished goods inventory has increased during the period. So that means that we produced more than what we sold. And we had talked about that in class. Right. So that makes sense. It's not unexpected, but we need to understand that there's times when that's going to happen. And that's, again, that's why we go through that calculation. That's what we're trying to find out. We're trying to find out what was the actual cost of not what we produced. Of course, we want to know that, but we want to match the cost to the sales. So what we sold, we want to find out how much did it cost us to produce those products. Because remember, the product costs we said are what type of cost? Inventoriable. So we buy raw materials, but we don't expense it. Do we expense it? We buy raw materials, we buy plastic, right? We're going to buy plastic, and then what do we do with it? We actually, it's recorded as an asset, as raw materials inventory, until the point that it's sold. So that's what we consider to be inventoriable costs. All right, so I have problem 5 on the board, and by now you're probably getting good at doing this calculation. It says, the following data in thousands of dollars have been taken from the accounting records of Curry Corporation for the most recent year. This is what they told us. They told us what was the finished goods inventory at the beginning of the period, and at the end of the period, the raw materials inventory at the beginning and the end of the period, the work in process inventory at the beginning and the end of the period, the administrative expenses, direct labor, manufacturing overhead, purchases of raw materials, sales, and selling expenses. Now, they give us a lot of information. We don't need to use all of that to determine the cost of raw materials used in production during the year. That's what we're trying to calculate, is the cost of raw materials used in production. So they tell us that raw materials inventory at the beginning of the year is $80,000. Then we purchased more plastic, which is costing us $240,000. But then ultimately we're trying to find out how much plastic did we use in production. So the way that we could determine that is, well, we say, Caroline tells us at the beginning of the period, we had $80,000 worth of plastic. We purchased $240,000 of plastic from Turkey. Right? We could say we will make it 80,000 tons, so it's in thousands. And then, at the end of the period, we go back and we check. And we find out, because remember last class we said that there's a materials requisition form. So we know how much materials were in the storehouse, what we took out. But so we're going to go back and we check. We could do a physical count and determine that at the end of the period, we had $140,000 worth of plastic. So if we had at the beginning 80,000, we bought $240,000 worth of plastic, and at the end of the period, we still had $140,000 worth of plastic left. You follow me? We still had $140,000 left. So if we had at the beginning 80, we bought 240, which is 320,000. And then at the end of the period, we still had 140,000 left. That means that we actually used $180,000. So you're going to have to do that on the exam. Can you do it?
Yes, we can.
Yes, we can. Yes, we can. Right? Just like that. So don't get thrown off that there's going to be all that additional information to calculate the raw materials used in production. That's all we need to do. And it's going to be the same way, the same format every time. You start with the beginning raw materials, what you purchased, subtract what was at the end, and then that's how you figure out how much raw materials was used in production. So then the next question says, at this same company, they said, what is the cost of goods manufactured for the year? So it's the same company, the same information, the same selling expenses, the same sales, the same purchases of raw materials. It's all the same information that we're given. But now it says, what is the cost of goods manufactured for the year? So then we go to the next step. A question like this will be on the exam. Look, nothing on my sleeves. Look. A question like this will be on the exam. You can do it. Just like this, no tricks. I know you don't believe me, right? A question just like this you're going to have to do on the exam. Now this is like what, the third or fourth one that we've done? You can do this. So first we calculate the raw materials used in production. Then once we've done that, so how much is it? It's 180,000. All right, so we're going to the next step because now once we've calculated that, we want to get to the cost of goods manufactured. Then what else do they tell us? They tell us that the direct labor in this case is 400,000. That's how much we're paying the laborers on the assembly line. That's not the salary of the plant manager or the CEO. They tell us that the manufacturing overhead is 460,000. The total manufacturing cost then is 1,040,000. That's the total manufacturing cost. But remember we said, wait a minute. We have work in process, right? WIP. We have some partially completed goods that we need to adjust for here. At the beginning of the period, we had work in process of 140,000. At the end of the period, we had work in process of 100,000. And that leaves us with cost of goods manufactured of $1,080,000. So we calculate the raw materials used in production. Then once we've done that, remember, these are our product costs. 1, 2, 3. Those are our product costs. Those are all components of the manufacturing costs. We have to add those 3. But in this case, we have to calculate the raw materials. So we're told the direct labor, we're told the manufacturing overhead, which we said is indirect labor and indirect materials, but we have to calculate the raw materials used. So our total manufacturing costs, our product costs, are $1,040,000. And that gives us a cost of goods manufactured of $1,080,000. But we're not done. It goes on and on, my friends. Some people started singing it. You know that song, right? But didn't know what it was. And they'll continue singing it forever just because it is the song that never ends. Right, Siobhan, do you know that song? You do? I feel sorry for you. It's all right. After therapy and medication, you'll recover. That's what they told me. All right. So now we got the cost of goods manufactured, but we said the cost of goods manufactured is not really what we're trying to find out for our income statement. We're trying to find out the cost of goods sold. So now we go to the next part. Finished goods. It tells us that finished goods inventory at the beginning of the period is $240,000. Now, to the finished goods that we had at the beginning of the period, that's how much inventory we have in hand, how much completed products. Not WIP. We've already talked about WIP. The partially completed, we talked about that. Now we're looking at finished good. At the beginning of the period, we still had teddy bears in the warehouse. We still had inventory. That's worth $240,000. Now we add to that the cost of goods manufactured. That's the cost of manufacturing the teddy bears during this period, which we said is $1,080,000. But then at the end of the period, we found out that we sold some of those teddy bears. So we have to include the finished good ending, which in this case is $320,000. And that gives us our cost of goods sold, COGS, of $1 million. So in this case, they tell us that sales were $1,980,000. That's our sale of teddy bears, $1,980,000. And the cost of goods sold, we have to subtract the cost of goods sold, is in this case $1 million. And then of course, to complete our income statement, we have to subtract the selling, general, and administrative costs. So let's do that. So 1,980,000. So this is what we were trying to get to. This is why we went through this, to find out the cost of goods sold. But they tell us now we're going to do our income statement. You guys got this? All right. So let's do the income statement. Everybody's here till midnight? You guys good?
Yes.
All right, just checking. Now we're going to do the income statement. So we went through all of that. We're so excited. We found out that the cost of goods. Yes, Krista?
Is that what they, because I don't have a book, is that what they gave you in the book? I don't understand what you.
Which part?
That's the test.
The cost of goods sold? That's what we just calculated. So what we did was we calculated the raw materials used in production. Then we calculated the cost of goods manufactured, which is the 1,080,000. But then that's, we said, wait a minute, that's the cost that we incurred to manufacture the product. What we need to know is, what was the cost of the goods that we sold? Everybody follow me? So we manufactured a certain amount of product this month. To do that, to manufacture that product, it costs us $1,080,000. But what we're interested in is the product that we sold, which in this case is $1,980,000. How much did it cost us to make that product? So that's why we have to take into account the finished goods, because it tells us that we started with $240,000 worth of inventory, and at the end of the period, finished good inventory was $320,000. So what does that mean? What happened there? If we, at the beginning of the period, we had teddy bears,
Reduced to
value, go ahead, Greg.
We made 80,000. 80,000 were made.
80,000 of inventory remaining from the last
So we have $80,000 worth of teddy bears more than we did at the beginning of the period. Or the beginning of the period is also the same as the end of the prior period. Keep that in mind, because later in the semester we're going to have to intuitively know that when we're going through some of the calculations. So even if you're not told what the value is at the beginning of the period, well, you know that for inventory, the value at the beginning of the period is the same as the value at the end of the period, or the prior period, at the end of the prior period. So we find that we started with $240,000, and at the end we had $80,000 more teddy bears than we did at the beginning. That means that we didn't sell everything that we made. Isn't that what that means? And that's why the cost of goods sold is only $1 million, not $1,080,000. So this is the cost of goods manufactured. That's how much it cost us to make all the teddy bears that we made this period. But we didn't sell them all. What we did sell, out of this $1,980,000, that was how much our sales were from selling all those teddy bears, cost us $1 million. That's how much it cost us to make them. So our cost of goods sold is $1 million. So we subtract the cost of goods sold. That gives us our gross profit, which is $980,000. It's very common in a manufacturing operation that the cost of goods sold is a significant percentage of sales. So in this case, it's roughly 50%. In some cases, in some industries, now it depends on the industry, in some cases, the cost of goods sold is 80% of sales. So this is actually not so bad. 50% of the sales actually is cost of goods sold. This is very helpful to us because if it was 80%, then that helps us focus on what? Reducing costs. So we need to know where the costs are, where we might have issues. Is it in the manufacturing cost or is it our operating expenses? So we're going to look at our operating expenses. Maybe it's our operating expenses that's too high. So in this case, they tell us that in our operating expenses, that's our SG&A. In this case, they tell us that the administrative expenses are $300,000. And our selling expenses are $280,000. Which means that our SG&A is $580,000. That means that our net income is $400,000. So we had sales of almost $2 million, and after taking into account the cost to make the product that we sold, the cost of goods sold, and our selling general and administrators. So remember, this is our product cost. This is our period costs. So these are our manufacturing costs. These are our non-manufacturing costs. Our net income is $400,000.
Question, Professor? I'm a little confused on why. I know in the work in process, I know why the 40,000 is being added, but with the finished goods, I don't know why those are being subtracted.
Because what we're trying to find out is what did it cost us to make the products that we sold? Well, here we're saying that we have inventory, finished good inventory, that's $320,000. That's cost to us. Those are inventoriable costs. That means we put $320,000 into that inventory. But if it's inventory, if we still have it, that means we didn't sell it. We just want to find out what was the cost of the product that we did sell. What is the cost of goods sold? So we need to definitely subtract that because we still have it as inventory. We still have it. If we still have it in our warehouse, then it's not sold. We just want to figure out what was sold. Now the numbers could have been different. Maybe this was $220,000, or maybe it was $120,000, or maybe it was $820,000. But that's going to tell us how much finished good inventory we have on hand, and that's going to give us insight into how much product we actually sold and what we have left. So we know what we produced, and we know how much it cost us to produce it. And so what we're trying to figure out ultimately is, now that we know that, what is the cost of the product that not only was produced, but that we actually sold? That's what we're trying to find out. And the reason why we're trying to find that out, because on the income statement, we're not, the item is not cost of goods manufactured. Why? Why don't we have the cost of goods manufactured there? What's the accounting principle? Somebody, why is it not cost of goods manufactured? Because remember, we said that the inventoriable cost. Why is it not cost of goods manufactured? Why is it cost of goods sold? Yeah, I think that's it.
You didn't sell everything you made, so you still have inventory left over, which is counted as an asset until it's sold.
Yes, but there's a accounting principle. Go ahead, Tatiana.
Matching principle?
Right. The matching principle. What does the matching principle tell us? What is it that we're matching?
Cost of buying.
Cost and expense.
Right. Our sales and our expenses.
Yeah.
That's what we need to match. So that's why we go through all of this to find out, granted we have these sales, what did it cost us to produce the product that we sold? Not what was the cost to manufacture product that year or that period, but what did it cost us to produce this? That's how we're going to know if we're profitable. That's great. We have almost $2 million in sales. How much did it cost us to produce $2 million worth of teddy bears? In this case, $1 million. So our sales were $1,908,000. The cost to make those teddy bears was, in this case, $1 million. All right, we said that there's different types of costs. What is an opportunity cost? In this case, that was one of the questions on the quiz. An opportunity cost is the benefit that is foregone when one alternative is selected rather than another. So we need to understand that there's certain opportunity costs. An opportunity cost is different from a sunk cost.
Some already.
What's a, yes, go ahead, tell us.
Some cost in the
Irina, right?
past, yes.
Not to be confused with Tatiana, right?
No.
Right, okay, so Irina, go ahead. So the sunk cost,
Cost which happened in the past and we can't change it.
right, we can't change that, and so if we can't change it, then we shouldn't take it into account when we're making decisions. We can't change that cost. We already spent $5 million on the equipment. Now we need to decide whether we're going to continue to make the product or buy it. But the cost of the equipment is a sunk cost. So in other words, if we continue to make the product, or if we decide to buy the product, we still have that $5 million in cost. So our decision to make versus buy is not going to change the cost. So it's considered to be a sunk cost. It's generally hard for most people to separate. We keep saying, but wait a minute, what about the $5 million? But the point is that it's already spent. We can't change that. We can't unspend the $5 million. We've already spent the $5 million. It's a sunk cost, so we shouldn't take that into consideration when we're making future decisions. So that's the difference between opportunity cost and sunk cost.